What's up everybody, Tom here with another video. In today's video, we'll be discussing why this chart is the most important to be looking at in the markets right now. We'll also be talking about our technical analysis levels for the SP 500, Nasdaq, Bitcoin, gold, US dollar, Tesla, and others. Yesterday was a red day for the markets, but the question is this just the beginning of a bigger decline or just a blip on the eventual returns of April being bullish? Let's take a look together. Stay tuned. So guys, as we always do, let's have a look at the last 24 hours in the stock market using a heat map of the SP 500 to see which sectors got hurt. And you can see here it's semiconductors and also Tesla, but there's more to this Tesla story that meets the eyes. And I think that tomorrow you're going to find that Tesla does a little bit better than it did over the last 24-hour session. We had Elon Musk actually coming out and putting some words in on that story about the car crash. So semiconductors got hit, but when we take a look at the major indices, you'll see nothing really was safe. The Dow Jones and S&P 500 were down a little bit. The Russell 2000 and the Nasdaq were hit the hardest, which means that we're going to see the same old story, technology and consumer discretionary being the two weakest for the day. And strangely enough, this might be the first time occurrence for the real estate sector being number one in the market, actually eking out a slightly positive day or situation. So we're in earnings week now, and Tuesday brings one of the biggest companies that we're really looking into, and that is Netflix after the close. Remember, always have these anticipated earnings. It's very important that we have these. Snap and Intel also later in the week. We also have the Biden summit later in the week, which could affect the stock market depending on how that goes. But for now, like you look at things like PCC, and you'll notice here it's at 0.884. This is the put call ratio for anyone that doesn't know. Basically, there was a lot of puts opened yesterday in the market, and the more puts that are opened, the less likely the market is to crash or to correct. Remember, if more people are thinking that the market's going to be bearish, it is usually less likely that it's going to occur. So put call ratio actually went up again yesterday, pointing to people are concerned about the market, but that move wasn't that big. You know, we've seen 3-5% moves. That was only a less than 1% move really across the different ones, the different indices. So it really wasn't enough for me to think, wow, that should be going up by that much. Shows again why people unfortunately have these knee-jerk reactions to bearish sentiment. Let's go over here to the dollar index, and you'll notice the dollar index broke through all of our supports recently. The 92 got broken through, which made a very compelling case down to the 91.35 support. 91.35 support got obliterated, and now the dollar index seems to be weakening further and further and further. When we have a look at this weekly, we're at this point through the weekly 20. It looks like we're going to go back down and start consolidating somewhere in this 90 to 89 area or zone. If the dollar index doesn't pull up right here, right now, you would think we're going right back down into the zone. This is not that great for dollar index bull fans. Of course, the bullishness has really left the building at this stage, and it just shows that that 50 exponential moving average, which we were talking about a little while ago, wasn't to be messed with. We saw back on the left-hand side that it was a respected moving average on the weekly, and again, it became a respected moving average. But what is this good for? Well, it could be good for gold traders and silver traders. So because the stock market fell a little bit yesterday, and also gold's been having a great run on it, gold actually had or posted its first daily loss in a few days. This is not a good looking candle by itself. Of course, it looks like a shooting star, or some people will think of it as a pin bar candle. But when we scroll down into the smaller time frames, you'll notice the 4-hour is hitting the 20 moving average and hitting the previous resistance. So if gold's going to do it and move up further, it needs to do so off this level. Ideally, you'll see gold hold this zone, do more consolidation, and then of course snap the top off here. So basically break past these resistances. Going down to a 30-minute chart, you'll see how really coiling it is, and how important it's going to be to break through this 1773 or even possibly 1776 on the upside. Once that happens, then we can go back, retest that high, and you know that if we get through that daily resistance, that daily high over here, where we went to 1790 and then rejected, if we get through that, this thing is so fully fledged bullish, it's not funny, because I love it when I see bearish looking candles getting broken up against. Now, new lows here, that will not be good. Unfortunately, we're going back down to the 17 kind of 60-ish zone, 1750 zone, because of course the follow-on momentum would be there. But today, gold, pivotal point, very important to watch it. I would hope it goes bullish based on that weakness of the dollar, and so would silver. Another one that's getting really bashed around, and I said it's the most important chart to be looking at right now in the markets, is Bitcoin. And why is that? Because Bitcoin 50 exponential moving average is under fire. Now, this is the only moving average, like all this bullish run, we've seen Bitcoin hold the daily 20 or daily 50. We've never seen the daily 50 come under this much pressure under consecutive days. It's always bounced. Look here, closes just above, closes on, and now it's underneath for today. So Bitcoin must hold this zone. I feel like Dogecoin, which of course is very, very popular, Doge Day today, according to the internet, is really taking an effect on the markets. It's creating a lot of instability actually in the markets as money goes into Doge. And also it seems like big attacks are happening on margin positions inside the cryptocurrency world. So Bitcoin must hold this zone. I'm not going to like it if it gets underneath here, but remember to subscribe. And of course, come along to our live sessions 1.5 hours before New York market open, because this close will be important to the rest of the crypto markets. Let's go over here to Doge. Of course, Doge Day on today. Some people looking for it to get to 69 cents. At this stage, it's at 38. It did have a sell-off through the previous session, but it looks to be recovering. And check this out, 8-hour closure above this line. We had this line drawn up in our live session, and you can find that if we get a closure above there, which we did, this is starting to point to moving towards the 46 and actually moving to a new all-time high. Now, it seemed that last time Doge had a big move on it, all the rest of the coins got hurt. So will that happen again? If Doge goes to 69, maybe the rest of the coin market continues to get punished, and then we'll see Doge Day kind of end off, and then after that, maybe the rest of the money comes back into the other markets. But yeah, look, this looks okay on a chart right now. It's obviously incredibly speculative, and we'll have to see where it goes. I don't know where it goes. No one does. All we know is that currently sentiment is strong, and of course, the trending effect of the internet is starting to begin throughout the world. Let's move over to Tesla. Now, Tesla, we had the fence down yesterday on this one. 720, we really, really wanted it to hold. It didn't quite do it because of that bad news, but it turns out that news may have been a little early and a little presumptuous, because if we go over here to Elon's tweet, you'll see here the Wall Street Journal talking about Tesla vehicles and people dying in them. And then Elon comes down here and says, your research as a private individual is better than professionals, Wall Street Journal. Data logs recovered so far show autopilot was not enabled, and this car did not purchase FSD. Moreover, standard autopilot would require lane lines to turn on, which this street did not have. So it just shows you that there's a big difference between what we're getting reported to and in fact what the market is doing around this stock and what the reality is. After hours, Tesla did start to recover. It did at least hold off the 700 line. Now we need to get above 720. We need to get through this resistance. Next resistance will be 740. And if we get through that, we can move towards the 780, 800 zone. So we can really put the pressure on the buy lines. Remember, earnings is coming up 26th of April here. So it's all about trying to get that anticipation into the event. GME, guys, nothing much to say here. Unfortunately, 173 was met by resistance. We haven't changed these lines in quite a few weeks. So 173 must be broken above. Then we have participation to 200. So nothing really happening here, but we'll keep covering it if something interesting does occur. IWM, Russell 2000, the smaller cap companies, 220 continues to hold here. A little bit disappointing on IWM. I would have hoped this was a slightly stronger market yesterday, but it hasn't been. Let's see if we can get it back to 230. We'll just keep watching it, but 220 must hold. Little bullish buy wicks off that level shows some demand is here from the market. At this stage, there's just nothing else. What else can we say? It's there. US 100 looks fine, still holding above that 13.9. 13.9 is a good support level for it. It did bounce off that zone yesterday. Now we need to get through 14,000. And once we close above 14,000 again, I would expect it to go to new highs. And of course, our target here is 14.4. these pullbacks are very small in the scheme of things. Same with the QQQ, of course, you can see the pullbacks very small, and all of them are just coming back to previous highs over here. I think that the QQQ needs to consolidate above here. In fact, the longer it coils above here, I said this last week, the better it is. Allows all those moving averages to catch up with it, because remember, they're lagging indicators. They all act as dynamic buying pressure from algos, retail traders, etc., and allows us to push to the next level. Netflix will be super important to creating a sentiment story through earnings week. Aftermarket close here, I'm going to be looking at Netflix for sure. Let's move over to the SP 500. The community trend line here has been hit. It's been partially breached and then sold off a little bit for. So you can see the weakness really did start to come into the market right when it hit the community trend line. Just shows you the power of technicals. But this line here is no good unless we see lightning bolt down or a little bit of further confirmation. It's very hard to short into earnings unless you really just have that massive bearish intention on the market. Because yeah, it's hit resistance, fair enough. It's close to 4,200, fair enough. But it must form further confirmation. Hasn't done so yet. 20 moving average would be where I believe it corrects to, and we'll continue to watch it on the channel. As always, guys, if you've enjoyed this video, please remember to subscribe, hit that like button, and we'll see you 1.5 hours before New York Open. See you there, guys. Bye for now.